Hello, my name is Steve Bigelow with the Candlestick Forum. Candlestick analysis has some great, huge benefits for traders and investors that want to have a much more accurate read as far as what's going on in a price movement or a trend. As we can see, after the Dow traded up, it kind of failed right in this area where you would kind of consider you have a double bottom. Your stochastics in the overbought area. But the nature of each signal clearly demonstrates there's not a strong force to the upside right now. That would lead you to start thinking, all right, maybe we're not heading up, even though we're above the T-line after a big, strong signal. This may just merely be a bounce in a downtrend. You get a further confirmation by witnessing what happened in the NASDAQ today when it traded at positive off the T-line and then came back and traded just below the T-line. It's still pretty much telling there's not a strong bullish force, that the downtrend may still be the predominant factor. What would confirm that? Obviously, a lower open after a doji would tell us this downtrend is still in progress. There's about 5 or 6 very quick, simple indicators that indicate whether you're in a downtrend or an uptrend in the markets. And one of them is that if you do simple scans at night and you find that the bearish signals are showing much better resiliency than bullish signals, the assumption has to be that the indecisive nature of the market still is not showing any bullish or great bullish strength if the bearish reversal signals are acting well. We recommended shorting Moderna today based upon a bearish engulfing signal at the top of a fry pan bottom, right here at the breakout level where it should be breaking out if it was confirming a fry pan bottom. But the bearish engulfing signal told us that pattern failed, and it failed right at a level everybody was watching. This told us the sellers are back in control. So one of the major indicators that the market may not be very bullishly strong right now is the fact that if you can identify much better bearish signals and patterns, we recommended shorting NVAX because you can see the obvious bearish J-hook pattern that could lead to a wave 3, the same magnitude as wave 1. Tesla, same scenario. If Tesla and the other major indicators like Apple, Amazon, NVIDIA, the ones that everybody's watching and trading, if they are showing bearish signals, that tells you that there's probably a bearish consensus in the market. What would confirm the downtrend? The doji rule. If they open Tesla lower tomorrow, the doji rule says they'll probably move in that direction, confirming breaching this level, going into wave 3 to the downside. And there's also the ability to identify which sectors are the strongest. The oil stocks have been acting very strong, and you can see that based upon the pattern setting up, the bullish J-hook patterns. And we recommended EOG because not only did you have a bullish J-hook pattern, but notice how it started with one of your strongest reversal signals, a bullish flutter kicker signal, and today's positive trading broke you out through this level. The candlestick signals also illustrate when it's time to take profits. We started buying Sting down here when it broke this level after a bullish engulfing signal. Now you're up in the overbought area. You had a hanging man, bearish engulfing, evening star type signal. What's that tell us about our probabilities? Probabilities are pretty strong with time to take profits and close out this trade. Everything built into candlestick analysis is just common sense, using the signals that were supplied by the Japanese rice traders that produce extremely high probability results. Now, taking that information allows you to maximize your profitability. We're doing our option training, a full day training on October 29th. All this is building our analysis into which strategies would be the best to take advantage of what we suspect would be a downtrend. We might be buying puts here. We bought put spreads here because you were already in a downtrend. It looked like it was going to continue. And when they gapped down again, we started buying puts right here, anticipating more downside. There is a very, what do I say, powerful strategy that because something's going down doesn't necessarily mean you want to buy puts all the time. Spreads work very effectively, more effectively than just buying calls and puts outright. So, and when you can analyze where you are in specific areas of the total market trend, gives you a lot more insight as to which option strategies you might be using at those particular times. So join us. Again, a full day training. It's scheduled to go from 10 a.m. Eastern time to 2, but our experience is you won't get out of the session before probably 3:30 or 4 o'clock. That'll be it. We'll see you in the chat rooms.